All right, what's going on, Tycoon? Super excited about today's video. It was a requested video. It was how to do debit spreads on Robinhood. So I'm gonna go ahead and make that video real quick for you guys, and I hope you enjoy. If you do enjoy, don't forget to hit the like button, smash the like button for me. That would really help me out a lot. And if you have your own request for a tutorial or how to do something or a strategy or what a certain indicator is, what how to use the RSI, things like that, let me know in the comments below and I'll be happy to make it for you guys. With that being said, let's dive right into the video. Today we're going to be looking at how to do a debit spread. All right, so there's four main things that I want to go over with debit spreads. Okay, and I'll go over them really quick. The first one is volatility. Okay, so a reason that you would trade a debit spread versus buying shares, okay, is for the volatility. Okay, options are leveraged much more, so they're much more volatile. Okay, options are basically a leveraged asset. Okay, so this is a way where you can gain access to that leverage, okay? But it's safer than just buying a regular call by itself, okay? So in order to do a debit spread, you have to buy one strike price and then sell another strike price, okay? You have to buy a more expensive call and then sell a less expensive call, all right? As you can see here, they're very volatile, okay? If we go, we're looking at the 1 week chart right here on Robinhood. And you can see here, we have highs of 40% right here. It says up 40%. So keep an eye right here. Up 40%, up 50% now, up 58%, up 74%. Wow. I mean, that's great. These are great profits. Up 67%. Okay. And currently we're sitting at up 20.93%. Okay. We even went down as low to zero to no percent profit. Okay. To break even. So from up to 75% on November 15th, right before market close, to November 16th, break even. So that's a drop of 75%. All right. So these are very volatile things. So the most important thing is to know your profit goal. Okay. Every time that you enter a debit spread on Robinhood, it is going to give you your max profit and it's going to tell you what your max profit is. So based on your max profit, you can gauge what your profit goal is going to be. Okay. You can buy multiple debit spreads. Okay. You can buy 10 debit spreads and you can have, let's say you have a max profit of 100%. You could sell, you could sell 5 of your contracts at 30%, and then you could sell the other 5 at 60%. And 60% was your was your, second target goal, your second sell zone for profit out of that 100% profit. Okay. So that's the way that I would look at it. And that's the way that I personally look at it is you don't always, my goal isn't to hold the contract till expiration and let it expire worthless. And most traders don't do that. Most people who trade debit spreads rarely, let them expire in the money. Okay, what you want to do is trade them. All right. Know your profit goal. Okay, that's number 2. All right, there's a max profit, and then you need to set your profit goal within that max profit. Okay, of what your profit goal is going to be and when you're going to get out the trade and when you're going to look for another setup to get back into that trade or to get into a different stock or a different investment with a different and better setup. Okay. So number 3 is going to be if you plan on trading debit spreads, I very highly suggest you do these to highly liquid stocks. And the reason for that is because you have 2 legs to your option. All right. You have, the one that you're buying and the one that you're selling. So anytime you close it, there's going to be 2 legs. You're going to have to sell and, you're going to have to close 2 positions at once simultaneously to fill an order on a buy or a sell for a debit spread. Okay. So you need to have something that's highly liquid that has enough, liquidity in it, because the last thing you want to be is, to have an an options debit spread, have 20 contracts, deep in the money, but there's no liquidity. And yeah, maybe you were able to get 1 or 2 sells filled for, a good profit, but now there's no volume, there's no liquidity, and eventually you're just losing your investment overall because you're never able to sell your contracts for profit because there's no buyers, there's no interest, there's no liquidity. All right. So you can buy multiple debit spreads if there's enough open interest, if there's enough volume, and if there's low volume, just do one. All right. You don't need to, get rich off of every play. You can put 50, 100, 200, $300 and you just get one debit spread and a couple different debit spreads and let those sit and make your money. And it'll really do some good things for you and for your account. I know it really helped me out a lot. Okay. So to do a debit spread, okay, what you would do is you would type in your ticker symbol you want to look at, okay? So PayPal, for instance, all right? And then you would go to trade PayPal options. You need to have options trading enabled on there, okay? And then you would go to your strike price that you would want. And for us, we are going to be looking at the May 2022, and we're going to be looking at the 290 and the 300, okay? So as you can see here, if you click on the option, all right, it's going to pull up the data for you. All right. It's going to tell you the bid and the ask, the market size, etc., the volume, the open interest, and things like that. Okay. And then you click on the 300. It'll give you the Greeks, the delta, the gamma, the theta, vega, the rho, implied volatility, the volume, the open interest. Okay. So basically what we have here, all right, is a debit spread that we can do, and I'll go ahead and show you guys. What you would do is you would buy the 290, okay, and you would sell the 300. All right. So this is an example of one that has low liquidity. All right. The reason it has low liquidity, if you look at the volume, there's only 5 of these traded today. Okay. The open interest means how many of these contracts there actually are on the market, and then the volume was like how many were bought and sold that day. Okay. So there's only 45 available. So I wouldn't go in here and buy 45 of these, okay? But this is something that has, it's expiring in May 20th, 2022, all right? So it's about 6 months out in expiration at the time of this recording. It's November, all right? November 19th or November 17th, one of those days. So they're 6 months out. As you get closer to expiration date, options will increase in liquidity and volume, okay? And then also, this is really far out of the money. All right. PayPal is currently at 200 and we're looking at the strike price, 50% above it. All right. So that's the reason why the volume and stuff like this is low. So this is a good example of low liquidity. All right. So don't go in here and buy 20 of these contracts, 20 of these debit spreads, because you're most likely going to have some struggle, or you might have some struggle getting an order filled. Okay. But with that being said, so what I did was I hit buy, okay, and then I clicked sell, and I went to 300, okay, because you need to buy the more expensive one that costs 3.63, and then you sell the cheaper one, 3.08, and it'll pull up call debit spread, okay. So if it doesn't say call debit spread on Robinhood, then you messed up. All right, it's going to show you the total cost of the trade. It's going to show you expected profit and loss, and Robinhood has this really nice chart now that's awesome. This is something that they didn't have last time I was using Robinhood, but it's just a little graph that shows you PayPal's price at expiration and what your profit and loss is going to be. Okay, so that's what this white line is right here, is basically PayPal's price at expiration. And then this is going to be your profits right here, this green line. Okay, so if PayPal is at, so our break even is, it shows you right here, max loss, max profit, break even. So break even is 290.55. That's what this line is right here. Okay, 290. And then anything above, so if PayPal's at 294 at expiration date, which is May 20th of 2022, if it's at 294, we make 42% on our investment. If it's, let's see, a different one. Let's see if it's at 296, 43%. Okay, 44% right here, 55, 56, etc. Okay, so this is going to be it right here. Your max loss is $55. All right. That's what it's going to cost you to get in this trade. Total cost. That's what your max loss is going to be. And your max profit is going to be just that, your max profit. Okay. So as you can see here, $55, possibly turn that into $900, $950. That's an amazing return on your investment. That's over 1,000%, nearly 2,000%. So on a trade like this, you know, you can easily get yourself 100%, no problem. Okay, and get $100, and then now you have $100, and maybe PayPal is a little bit closer, and you want to get some more debit spreads. Okay, but now you want to get some more liquid ones. Well, now you have $100 to work with instead of 55. And now you can maybe buy some more expensive and more liquid options contracts on your debit spread. Okay, so hopefully that makes sense for you guys. All right, let me show you the reason why I'm choosing 290 and 310. So again, we'll go over this real quick. Max loss $55. So worst case scenario, you hold this thing to expiration and it did not go up near 290. Okay, it didn't reach 290. Then you lost all your money. Okay, but if it's above 290.55, you're in profit. All right, and you got a return, and there's so much time on this trade that there's plenty of time in between. Like I showed you guys earlier, with PayPal, with the volatility in debit spreads. Okay, there's plenty of times where you could get profit. We'll pull up a debit spread that I have right here. All right, and we'll go back and look at the 1 week chart, and you know, right here it's up 75%. Okay, why didn't I sell when I was up 75%? You know, I'm only up, let's see, my total return is only 18% right now. Well, it's because I have a really high max profit. All right, near 1,000%. So because I have a near 1,000% max profit, 75% isn't good enough for me. Okay, so I'm gonna hold my position until I get, you know, closer to 200-300%. And once I'm at 200-300%, I may sell my position. You know, if it looks like we're gonna drop, okay, or I may hold it because I think I'll be able to get the 500% that I'm really aiming for. All right, so I hope this video made sense. If you like this video, don't forget to like, comment, and subscribe. I'll be making daily videos, and if I can't upload daily, you know, I at least have some videos coming out weekly. Okay, at least one video a week. So stay tuned, stay watching. If you got any requests, let me know down below.